Living is not anymore an alternative sector. It's an established sector, it's a diversified sector. Now is the time to see this sector just blossom from that alternative to be, probably one of the leading real estate sectors.
2 million new homes are needed each year in the European Union. All across Europe, the housing picture makes for sober reading. From an affordability standpoint, more than 23 million households in Europe spend over 40% of their disposable income on housing. Governments are working to address the crisis, and investors are part of the solution, with the living sector an evergreen investment proposition in real estate. But where are the best opportunities in the sector, and what solutions will shape modern living in Europe? I'm Andrew Belt, and a warm welcome to the PATcast, the podcast from PATRIZIA, an investment manager in global real assets. In PATcast 33, I'm joined by PATRIZIA's Head of Investment Management Living, Antonio Marin-Bataller, Head of Investment Strategy, Radu Mircea, and Head of Value Add Private Equity, Mads Ruda. Antonio, Mads, and Radu will share their views on the living transition, one of the 4 dual megatrends, alongside the digital, urban, and energy transitions, which guide PATRIZIA's investment strategy, and highlight where the best opportunities are for investors in the living sector. So, getting into it, Antonio, I'm going to start with you. Where are the housing solutions of the future, would you say? Or what are the housing solutions of the future?
Well, I think before we jump into the solutions, I think we need to understand the market and the challenges we have. So, first of all, we like to summarize in 2 key definitions. So, viability and affordability are 2 key challenges to make returns and investment works. And that is primarily as a result of the past few years, interest rates rising, inflation increasing, and the cost of equity overall also has increased. So when we're looking at opportunities, it's very important to understand these 2 concepts. And equally with the shape of the economy today, the K-shape as we call it, affordability is a major challenge and is something worth debating. So when you put these things into context, 3 areas really kind of emerge as potentially 3 clear winners. One is affordable housing, which I'm sure we will debate in more detail. Second opportunity is within the build-to-rent or micro-living rental opportunity, where we're seeing people moving into smaller households, be it for students or be it for young professionals, and for the older generation within the single-family housing.
I completely agree with Antonio, and I feel that what has changed over the last 10 years and created this broad opportunity set within living in Europe is, on the one hand, that the undersupply has maybe broadened or become more pronounced than we had anticipated. So, contrast to the US, the level of building activity has still languished in the region of 50% below pre-global financial crisis levels. And this has created opportunities beyond maybe what the focus used to be 10 years ago, which was largely energy efficient, dense urban living, towards adjacent sectors, relating to what Antonio was mentioning with smaller households, as well as suburban living and single family rental in certain markets in Europe like the UK. In addition to the structural undersupply that we're seeing across Europe, we're also seeing changing lifestyle preferences. So people renting for longer, people renting in suburban locations in single family rental units, or renting smaller units such as micro-living apartments, given the decrease in the average household sizes in major cities across Europe.
Yes. And then maybe sort of to unfold a bit sort of what you said, Antonio, and on affordability. We really need to build not only more affordable, we also need to build more, and especially more for those people that we characterize as key workers, nurses, teachers, firemen, etc., who really have struggled in the last decade to finding a decent place to live in proximity to where they live, so they cut on their commute time. And I think this is one of the great opportunities that we probably will speak more about today.
But if I challenge you on that, Matt, when we're building for the mid to lower end of the market, coming back to the point of viability, that's very challenging. So what is the solution?
That's a great comment, Antonio. I think we couldn't do this without the sort of cooperation with governments or municipalities. So actually what we need here is public-private cooperation. We need that kind of acknowledgement from both sides that we need people to a higher degree accept to work together. So on one side, we need governments to support with financial support, which we have actually seen coming through over the last, let's say, 5 years to a much greater extent. And then on the other side, that the private market, being pension funds, insurances, foundations, whatever, taking up the ball and be part of that. And I think we here at PATRIZIA can be there somewhere in the middle, bringing these parties together. That's a great opportunity for us.
So if I may add on that, I mean, for me, I'll summarize that as social infrastructure, right? Is, for the first time, we've seen Germany, Ireland, Spain, many governments coming with affordable housing programs, which are really creating a quasi-infrastructure investment opportunity, which is extremely exciting. And, recent paper from the European Union at the beginning of this year, fomenting other governments to invest more capital into this sector, it's a huge opportunity.
I fully agree. I think the European community said that we need to build 2 million more houses a year. So they encourage, of course, the local countries in the EU to support. And I think it is a lifetime opportunity to create that. You can call it social infrastructure because it's typically very, very long-dated income, typically with rents which are, because they are supported, so they are below market rents. So you have people being able to actually rent and typically staying there for longer.
So Mats, social infrastructure makes lots of sense, economically, returns-wise for investors, but it's not everything about returns, right?
You're right. It's also about delivering houses, apartments which are energy efficient. It's about building social infrastructure in the forms of kindergarten, childcare, libraries, etc., close to where people live, and creating a community around where they live and where they can actually connect. Because I think that's another challenge that we sometimes forget, that people, not only in Europe, around the world, but really are more and more socially isolated. More and more people, when they are, feel lonely. So one thing we in the real estate industry should also focus on is really how can we make people interconnect more, so you actually know your neighbor.
So a dual return strategy.
That's what we could call, I would definitely do call a dual return, that you have financial return on one side, you have these other social and environmental factors on the other side. And they go hand in hand, and we need to deliver on both sides of, or on the double bottom line, as we also say.
So very much setting the scene. But to take a step back, we see that the living sector comes top of most investors' wish lists. So I want to ask Radu, you mentioned structural undersupply a little earlier, so maybe that's part of why living sector is top of that wish list. Can you explain a little bit more on that?
Absolutely. So in addition to solving a genuine societal issue across many countries in Europe, I think the appeal of living real estate in a multi-asset context, if you want, is that it's and the appeal of real estate today, I think, is quite a lot related to the ability to provide an inflation hedge in today's macroeconomic environment. So inflation, the structurally high inflationary pressures that have been exacerbated by recent supply shocks like the Iran war, and real estate is in demand, particularly for this inflation hedging ability. And within real estate, the sector that has delivered on a multi-cycle basis in terms of providing this inflation-like growth is residential. It has outperformed the other core traditional sectors in the European context, at least in the last 25 years at least. And a big reason why that's the case is the structural undersupply that I was alluding to before. We've seen this persist over the post-global financial crisis period, and even being exacerbated in the last few years because of the, let's say, more cyclical headwinds to viability that Antonio was referring to. In certain countries like Ireland and Spain, for instance, despite very high recent population growth, partly driven by immigration, construction activity is more than 50% below a sort of long-term average. And of course, this is creating increasing pressure on the rental markets in those countries, as well as a number of other institutional rental markets across Europe. From the demand side, I think it's also worth emphasizing that the tailwinds underpinning demand for modern living and renting in the major cities across Europe remain largely intact. So the cities winning in the knowledge economy race continue to attract people both from within sort of country borders as well as internationally. And the demand side remains extremely strong in those markets, as we've seen in the couple of years post-COVID, when there was certainly a big return to the major cities.
And sticking with you, Radu, there has been an evolution within the living sector over the last few years, something which our research team has looked into. We refer to a larger and more diverse living sector. Can you give us a definition of what the living sector comprises?
Yeah, I think the first step, and residential is not a new sector within European real estate, but it has certainly institutionalized a lot more in the previous cycle beyond markets such as Germany, where it had been a core sector in institutional portfolios for a long time. So markets such as Spain or the UK, which were, I would say, less institutional in the mid-2010s, have become much more liquid, much more established. And the opportunity set in those markets, as I was alluding to before, has also broadened beyond multifamily rental housing. So student accommodation is probably the best example of a growing market across Europe, where there's some very interesting tailwinds on the demand side as the higher education sector is becoming more international, more English language programs, more mobility across Europe. And at the same time, sort of the provision rates are starting from a relatively low base, particularly in Southern Europe and Germany, and to a slightly lesser extent elsewhere in continental Europe, on the road to catch up, if you want, with where the UK is today after probably 20 years of developing modern, purpose-built student accommodation. And in addition to student accommodation, there are also other segments that are gaining attention because they're interesting sort of demand tailwinds behind sort of smaller units, more micro living type of product, as well as senior housing in various forms in a number of markets in Europe.
And from a PATRIZIA investment perspective, which of those sectors are most attractive right now, would you say, Antonio?
I think when we look at the market, it's important where the money is going. And I think the first important thing to bring to the table is that there is a lack of capital out there, and the capital is more expensive, and the capital is more demanding. And what we're seeing is, for example, significant amount of money is gone into what we call secondaries, where investors have been buying stakes in funds for a discount out there, or recapitalization of existing portfolios, a bit more direct investment. And again, that comes at a discount, most likely with growth equity alongside it to grow the platform further. There hasn't been real distress as such. This is where investors really have seen the opportunity today, and especially in the living space. And there is plenty more to be done in that space. But what we're saying, going back to that viability point, is, value add capital, for example, now is filling the gap where core plus was before. And in the risk structures such as forward fundings, where you can get very tangible and attractive return with a limited or reduced level of risk, this becomes very, very interesting. So choosing the sector, be student housing, be the micro-living sector, which is let's say the early years of demographics where they go and live in city centers and urbanization driven demand, to then, later on in the single family housing or senior thereafter. Today's market is very much distinguished by those type of investment opportunities. And that is where, PATRIZIA sees the value today.
And anything to add, Mads, on this point, and Radu?
I can sort of supplement on the sort of social and affordable part, which, as you exactly said, Radu, there has been a funding issue for a long time, which is now being recognized by the Irish government, putting sort of 20 billion available to support delivery more of that kind of housing. The UK government have put a program together for the next 10 years of 38 billion pounds to support for more of that kind of housing. So that makes it possible to exactly answer the question about mitigating risk associated with building new, as well as giving a attractive return for the investors. So I think we all agree across the spectrum of living, there are very attractive opportunities across the spectrum.
I think there is also something that only happens every so often in cycles, right? And is, the old mantra of real estate, location, right? It's not very often when you find a moment in time in a cycle where you can go and invest in the top capital cities in Europe, Berlin, Paris, London, Milan, Rome, Madrid less so is quite toppy at the moment. So whilst there is low equity in the market, it's a very opportune time to be investing in what we say a de-risk entry point or discount point, because there is not really a lot of distress out there, let's be honest about it. So for us as a business, the opportunities we see being the affordable sector through this social infrastructure, highly supported public-private partnership, or be in the private sector where you can really drive returns, de-risking your position, but investing in the best locations in Europe makes today, a very, very opportune time to be investing.
And I think a couple of points mentioned by Antonio in relation to segment preferences, maybe on the micro living side, and the importance of location, make me want to emphasize the importance of having a very data-led approach to underwriting deals and the markets we're operating in. Mm-hmm. And I think the proprietary tools we've developed and the insights we're getting from the data intelligence help us underwrite at a fairly granular level, particularly the income side, the rent, even in those more niche segments. And I think that's very important because sometimes the underlying drivers are a bit different once you look at the right sort of local catchment and comparables relative to the market trends as a whole.
And you mentioned some of the markets there, the capital cities having an attractive moment in the cycle. Mads as well, you mentioned on the affordable housing side that the Irish government, the UK government very much getting behind it. So I just want to dwell for a moment on those markets. So which markets are really appealing to you when you're looking to deploy capital and invest?
So if you put numbers around there, so, let's take Berlin as an example, capital city of Germany, 4 million inhabitants. You look at the GDP growth of Germany versus Berlin, it's chalk and cheese, right? Germany has been growing over the last 5 years at 1.5% GDP growth. Berlin is growing at 10%, right? It just makes total complete sense to invest, and now is the opportunity to do it in Germany. Then you look at the viability. Land values have corrected by 19%, giving you a window of opportunity. There is no core capital going into direct development, and there is a very strong need for micro-living. That's studio and one-bedroom apartments, young professionals who are, within the affordability constraint they have, but they want to live in the city center. That creates a huge opportunity. Italy, for example, Radu can, talk more about it, but when you look at student housing in Italy, we're like calling the last frontier of Europe, 4% provision of student housing. Huge opportunity. You concentrate on the bigger cities, the Milans, the Romes of this world. So those are two examples of things that we're seeing, but we can carry on talking about, be student housing in Paris, be student housing in London. Great opportunity. For the first time, we've seen a repricing which is we've never seen it before. So today, the market offers investors a great risk-adjusted opportunity to be investing.
And if I could just add on one point that we also see a new trend of is the leasehold structures, that you actually have investors acquiring residential assets on 75, 80-year concession land. And there's a lot of that kind of land in Spain, not least, Italy for some parts, Germany not least. So that opportunity is also something that we can see a huge opportunity to build on and create new living space on some of this land.
And Radu, any thoughts on the market focus for the living sector in Europe?
I think the diversity of examples mentioned by the rest of the team also shows that from a portfolio construction point of view, there really is a broad opportunity set across Europe, from relatively regulated rental markets with quite a bit of embedded reversion, relatively affordable rents compared to income in the likes of Germany, to less regulated rental markets where there's a more immediate pass-through of inflation to NOI, with obviously potentially a bit more volatility over the cycle, like the Italian example could be, for instance. So fairly different portfolio outcomes that you probably get from these different segments. And of course, the affordable housing with the, typically more de-risked income side is another sort of diversifier and sort of defensive block for portfolios going forward.
So we've dived into a very widespread view on the living sector where we see the best opportunities, best strategies, best markets. But I just want to end on a bit of a sentiment check across the room. So, how positive are you on the living sector in Europe and the opportunities both for investors and to address the housing crisis in the continent?
Well, obviously, as you have heard, we see opportunities across the spectrum, and with governments now taking part of the sort of responsibility for creating more, making programs available of different shape and form in every country. So you need to have a very specific approach in every country. I'm very positive for us to both being able to actually create a positive financial outcome, delivering what is needed, as we said, sort of social infrastructure type residential for the people in need. So I think we have a good decade ahead of us.
I think living is going to remain a very high demand sector. In 2026 year to date, for the first time on record, we've seen investment in the residential sector be higher than in any of the commercial real estate sectors in Europe. As we mentioned, certain segments within living, like student accommodation, are seeing a lot of capital, and with 9 out of 10 students in many markets in Southern Europe and in Germany not even having the option of living in a purpose-built student accommodation unit, there's certainly need for more investment in that space. And with the current viability challenges that we emphasized during the conversation, there's certainly a lot of need for more investment also in the provision of residential and affordable housing in a broad selection of markets across Europe.
Living is not anymore an alternative sector. It's an established sector. It's a diversified sector. You can go in social infrastructure in the affordable sector where you will get a very structured, very attractive return with a social good behind it, but with long-term infra type returns. Or you can go into the private sector where you see the growth cities and the opportunities that we see be within student or micro or single family housing. The European market is very, very diverse. It's important to understand what you're doing, right? And it's different countries are working at different speeds and different cycles. However, today overall, in general, in Europe, there is a great opportunity. And that is a combination of the lack of viability and lack of supply we've seen over the past few years, but also the lack of equity, giving rise to a very strong opportunity. And now is the time to see this sector just blossom from that alternative to be, probably one of the leading real estate sectors.
Blossoming. We've gone past spring, but yeah, that's a good word to describe what we could see and the decade of opportunities in the living sector ahead of us. Radu.
And I think we've really emphasized the need for more housing, more construction activity during the conversation. And I think it's also worth emphasizing that within core portfolios, we think residential is going to play a bigger role going forward. And that goes back to the point I was making on the inflation hedging benefits and the sort of strong supply and demand conditions behind residential that make it a defensive sector for investors.
Can I just ask one question for Radu? If you look 10 years back in a institutional portfolio, how much did you typically see residential make up back then? And what do you see today?
I think the answer would probably depend a lot on which country you're looking at, as in certain markets in Germany, for instance, probably the Netherlands and Sweden, it was already a relatively high number 10 years ago. But I would say for Europe as a whole, for diversified core funds, we've certainly moved from single digit territory 10 years ago to at least a quarter of the portfolio today.
So there we have it. So great to have that conversation. Thanks to Antonio, thanks to Radu, thanks to Mads, and thanks to you for viewing our latest Patcast on YouTube or listening on Spotify or Apple Podcasts. You can continue to watch what we're doing on YouTube and keep following us on LinkedIn. Thank you.